Bindu ma'am, please start.
Yes, I am starting. Actually, पुष्पिंदर सर को कॉल कर रही थी. Okay. Good evening, everyone. I, CA Bindu Bansal, Treasurer, Ambala branch of NIRC of ICAI, welcome you all in the webinar on internal audit of banking, financial services, and insurance sector. Let's have a great evening of learning and growth. To begin with, I would like to invite CA Nitesh Kumar Gupta, who is Chairman, Ambala branch of NIRC of the ICI, to give his opening remarks. He is a very humble personality. He's a man of few words, but those few words are really purposeful and meaningful. So I would like to invite you, sir, to give your opening remarks.
Thank you, Bindu ma'am. My dear CA friends, ladies and gentlemen, I am pleased to welcome all of you in this webinar on internal audit. I also welcome Charanjot Singh Nanda ji, but he is not available in country, but he is in Dubai. But I am very thankful to him also, जिन्होंने इतना अच्छा हमारा एक वेबिनार इंटरनल ऑडिट पे कराया. I also welcome Central Council member and Vice Chairman of Internal Audit Standards Board ICI CA ज्ञान चंद्र मिश्रा जी. वेलकम यू सर. हमारा एज एन चार्टर्ड अकाउंटेंट मेन प्रोफेशन है ऑडिट. आजकल वैसे हम ऑडिट, इनकम टैक्स, जीएसटी सारा कुछ करने लगे हैं, बट हम कहीं भी जाते हैं तो हमें ऐसे बुलाया जाता है. कंपनी में, बैंक में हमें कहते हैं ऑडिटर आए हैं. तो हमारा मेन वर्क है ऑडिट का. तो इंटरनल ऑडिट इज आल्सो पार्ट ऑफ ऑडिट प्रोफेशन. तो सो टू शार्पन आवर स्किल्स, आज हमारे बीच में उपस्थित है 3 मास्टर्स हु आर नोन फॉर देयर एक्सपर्टाइज and experience in respective areas: risk management and 3 lines of defense, reducing emerging technology risk, big data and analytics in the financial service industry. So I also welcome our today's faculties, CA Ankur Garg ji, Mr. Mohit Kapoor ji, and CA Ram Prakash Shankara ji. They will enlighten us on this internal audits. Welcome you, sir. Thank you. Over to moderator.
Thank you, sir. And as CA Nitesh Kumar Gupta mentioned here that we don't have CA Charanjot Singh Nanda ji today here, and everyone will be missing him today because he is the one who adds enthusiasm, motivation, and so much of learning in every webinar. But as it is said that the show must go on. So let us begin our seminar with the first speaker, who is CA Ankur Garg, and he is the Director of Risk and Control NatWest. And he will be giving his session on risk management and 3 lines of defense. CA Ankur Garg is a highly motivated finance and risk professional with over 19 years of experience. And this he primarily gained within the financial service sector, specializing in financial accounting, reporting, risk management, and a lot more. So I would like to invite CA Ankur Garg to start his session and give his insightful words so that we can enhance and hone our learning skills. Over to you, sir.
Thank you, CA Bindu Bansal ji, and welcome everyone. It's a great honor for me to have this opportunity of presenting myself amongst you. So the topic that I'm going to cover is on risk management and 3 lines of defense. So I'm going to share my screen on the Zoom and would request all of you to refer your screen, and this will help us facilitate steer this discussion better. So when we say risk management, just a minute. So what is risk management about? So risk management is the process of identifying, assessing, and controlling the risks that exist to an organization related to its operations, earnings, compliances, and other stuff, which in turn provides reasonable assurance to the board, its management, as well as the other stakeholders on the achievement of the objectives that the organization has in line with the risks. So in simple terms, it's an iterative process which enables the management to take a risk-based approach in its decision-making, thus ensuring that the overall strategy and objectives are within the risk appetite and the profits that are generated for the organization are sustainable. If we say in the absence of, if we don't manage our risks, what will happen? The organization may have a chance of failure. It may have a chance of taking risks which are outside its appetite. It may just focus on profits, ignoring the risks that exist in the process, and thus it may fail in the long run. And we have seen examples of this in the past as well, where we do not have, the organization has taken risks outside its appetite, or it has not focused on a robust risk management strategy, and the organization has failed in the long run. In the short run, it may generate profits, but as it continues to take those decisions without thinking about the risks that exist or without managing the risk that exists, the organization is open to failure. If you can see on your screen, this is how a risk management process looks like. It starts with the identification of risks that exist. It then goes on to measurement and assessment of risks, and we will cover them one by one. Then it comes down to mitigation of those risks. How do we mitigate the risks that we have identified? Then how do we do reporting and monitoring of those risks? Because even if we have done all the other things, if we don't report, if we don't monitor, then it is of no use. And then finally, what sort of governance structure do we have to manage the risks that exists? Moving further, so this is an example of how a risk management framework looks like. It starts with, at the bottom, you can see that there are policies and standards. There are toolkits that exist that defines or provide guidance in terms of how the organization should conduct its operations. And basis that, it then identifies the risks that are applicable to the organization. So there can be different categories of risk, as you can see, and this is just an example. So, and once the risks are identified, then it further goes up where a risk appetite is defined. A risk appetite means what is the level of risk that an organization is willing to take while it is conducting its operations. So if the objective of risk management is that whatever decisions, whatever we do, it stays within our appetite. And it is key to note that I mentioned the word reasonable assurance. So that means that we cannot reduce the risk to zero, but we make efforts to mitigate the risk to a level that it comes within the appetite that is defined. And appetite is usually defined by the board. It is defined by the stakeholders, and that provides a guidance mechanism to the management to drive the operations in a way that the risk stays within appetite. Then moving further, as you see, we have a model where the roles and responsibilities of risk management are defined. Risk management is not the responsibility of a person. It's not the responsibility just of the board or of the management. It's the responsibility of each and every person that is part of the organization. And again, we will cover under 3 lines of defense. What does it mean about? At the top, you would see there is a mention of risk culture, values, and behaviors. This is a very important thing. Even if we have principles, we have appetite, we have identified the risks. If we do not have the right culture, values, and behaviors, we cannot drive those right practices that can help us to ensure that the risks are properly managed. And then, as you can see at the top, the overall strategy and the vision is defined basis the overall risk management framework that exists in the organization. So this is how a framework for risk management looks like. I would say that, okay, this discussion would be incomplete if I do not make a reference to COSO. So I'm sure that many of you would already be aware about that. COSO refers to the Committee of Sponsoring Organizations of the Treadway Commission. So this is a framework which is used across the globe, across the industries by the organizations for risk management. And it has got you can see on the right side, there is a cube that is created, or that defines the overall framework for COSO. And it has got 5 interrelated components. Control environment, that means that how much, what is the overall assessment of my controls. Risk assessment, what are the risks that exist and what is my assessment for those risks. Control activities, what are the controls I'm executing in the organization to manage my risks. Information and communication is how I'm informing or how I'm monitoring those risks that are identified as part of my risk assessment process. And then last but not the least, the monitoring activities. So these are the 5 interrelated components of COSO. And as I say, it is a very well established framework that is used across the globe by multiple organizations across the industry. Now moving on to how the risk management process operates. And if you remember the first slide that I showed, where we have the risk identification process. So under risk identification, we identify what is the risk that exists. And risk, when I say what is the risk that exists, risk exists in every part of the decision, every part of the process that we operate. So it is the chance of future exposure to adverse consequences as a result of the way we work and operate. And the key components or the key questions that we look at while we identify the risk is, if I am doing a process, I am running an operation, what could go wrong in it? And if something go wrong, what is the level of acceptance? Because if I do something, I will definitely say that, okay, if it is within a certain level, I'm happy to go away. I'm happy to proceed. If it goes beyond a certain level, I will stop and I will see that till the time it comes beyond that level, I will not proceed. So what could go wrong, and is the level of risk acceptable? And if it is not acceptable, how do I prevent or reduce the level of risk, which is what mitigation is about. And as I said earlier, that behaviors and risk culture are the 2 key things which underpin the entire risk management process. So this is what the first step of risk identification is about. The second step is risk measurement and assessment. Now, how do we measure the risk? I have identified a risk. If I'm operating a process, there is a risk that I could report out something wrong. There is a risk of financial misreporting. As we all are chartered accountants or from the finance fraternity, we know there is a lot of reporting that we do. We publish our annual organizations publish their annual results. So there is a risk of financial misreporting. So how do we measure that? So there are 3 key components while we articulate a risk or measure a risk. These are cause. Cause means that what could go wrong. If there is a risk of financial misreporting, it can be because my data is incorrect. It can be because my assumptions are incorrect. It can be because I am not following the standards, accounting standards that are prescribed by the institute. So there can be different causes. The next one is risk event. So as I say, there can be a risk of financial misreporting. Likewise, there can be a risk of non-compliant with say, for example, Companies Act. There can be a risk of non-compliant with the Income Tax Act, or likewise, any regulation. And there can be a risk of technology disruption. Likewise, there can be a risk of fraud conducted by internally or externally. And last but not the least, which is the most important thing, is what is the impact? Because as I say, not everything needs to be controlled. And the impact of the risk needs to be seen, and basis that applying the cost-benefit analysis measure, we need to take a decision that how do we need to manage that risk. So these are the 3 key components of how we measure the risk. Now, in terms of the assessment, there are certain key things that I would like to bring to your notice. Number 1 is inherent risk. What is inherent risk? Inherent risk means that whatever I do, there is a risk attached to it. I have not applied any controls or mitigation to that, and that is what my level of inherent risk is. So, in other words, if an organization has set up its objectives and it does take some actions to achieve its objectives. What is the risk that sits in this? Residual. So once we identify our inherent risk, we then apply controls to mitigate that risk. And I'll come to that in the next section, that what do we mean by controls? And then once my controls are applied, then there is a residual risk that stays, because as I say, we cannot mitigate the risk, or we are not aiming to mitigate the risk to zero, because there is a cost attached to it. We are managing the risk. So we are trying to mitigate the risk to a level which is acceptable and within our appetite. So residual risk is that remainder of level of the risk after the controls have been applied for. So under risk assessment, these are two key things. And then there is a third important term, which is likelihood. So the impact and likelihood are looked together to define what is the risk that that the organization is now having after applying the controls. So likelihood is that how frequently we can see that risk occurring. So the lower the likelihood, the better we are. And likewise, the lower the impact of the residual risk, the better we are. So this is how we assess the risk. We identify the inherent risks. We identify what are the causes to those inherent risks. Accordingly, we apply the controls to mitigate those risks. And then we are left over with a residual risk on which we assess both on impact and likelihood to see whether we are within appetite or not. I'll move on to the next one, which is the third step of our risk management process, which is around risk mitigation. Now, how do we mitigate the risk? And as I've been saying, that it is through the design and implementation of controls in the process in the organization. And what is a control? So if not looking at the definition which is here, a control is intended to either prevent a risk materializing or detect a risk after it has been materialized. So there are two important things here, that either it is preventing a risk from materializing. For example, if I am making a payment outside the system, I have built-in controls where one person is initiating the payment process, a second person who is independent of the first person is authorizing the payment, and then there is a third person who again is independent, is releasing the payment. So that is preventing the risk of any fraud or any embezzlement of funds that can go out of the system. So that is what a control is intended to prevent. And likewise, it is deducting a risk after it has been materialized. So there are reports that are published for the management to look at the numbers. There are reconciliations that are performed in the process to see whether the numbers are making sense. So, for example, bank reconciliation statement that we prepare. So these are deductive controls, because if something comes out of that process, that is all that the risk has already been materialized. So the overall objective of control is to see that, as I said, been saying, that our residual risk remains within appetite. And as you can see down under, there are three types of controls. Preventive controls, I have just spoken about. Deductive controls also I have spoken about. And directive controls is something which provides instruction, guidance, or direction and establish the desired outcomes to reduce the likelihood of a risk from occurring. For example, training. For example, our accounting standards. So these are all directive controls because they are providing guidance in terms of how do we need to operate and how an organization needs to operate or needs to account for its numbers and reduce the likelihood of a risk from occurring. So the likelihood of a risk is if we do not produce our numbers in line with the standards, then of course we are non-compliant with our requirements of our statutory laws and regulations. So these are the three types of controls. And as I say, control are the mechanism to mitigate the risk that we have identified as part of the measurement and assessment process. The fourth one is reporting and monitoring. So as I say, it is very important that whatever we have done so far, we have identified the risks, we have measured it, we have assessed the residual risk, we have applied the controls, but then how do we monitor and report this entire process? So monitoring is all about how does the organization track and evaluates the level of risk that exists there. There are different ways of monitoring. There are reports that are published internally within the organization. There are audits that are conducted as part of the requirements that we have set up in our laws, that where there are reviews conducted by internal auditors, there are reviews conducted externally as well. So all these are the process of monitoring or the risk that exists in the organization after all the things have been applied. And the idea is to see whether the risk management process is operating effectively or not. Reporting is again the outcome of our monitoring, where how are we reporting out the risks and controls that exist in the organization. And the idea is, basis this report, whether the organization is able to make the changes if required in its strategy and objectives, whether the organization is having, or the board is having a good review of the internal controls that exist there, as well as whether it helps the board to evaluate whether the decisions are made within the appetite as well. And if not, then does it need to change its strategy? Does it need to change its goals to ensure that the organization is risk managed? The last part is governance. Now, again, it's a example. And as CA Bindu Bansal mentioned, that I am currently working as a director within risk and controls in NetWest Group. So it's an example that I picked up there, how the governance operates. So at the top, we have the board of directors, which is the overall body for ensuring to how the organization is running, how the organization is operating, as well as is performing. Then within that we have and this is the governance risk, and it's a risk governance structure that I'm sharing it with you. We have the group audit committee, we have the board risk committee, which are responsible for managing the providing oversight and advice to the board on the risk exposures, profiles, as well as risk appetite and culture. And then down under, you can see that there are different subcommittees like the Executive Disclosure Committee, the Executive Risk Committee, as well as other committees. So a risk management process flows from the top, starting from the board, and come down under through these different committees. And that's what the purpose is, that the monitoring and reporting activities that are performed, how basis those reports, and informed decision is taken by the senior management to ensure that the risks are well managed. So this is what the risk management process is all about. I can now come on to the 3 lines of defense model, which is again a very a unique concept. And as I said earlier, the purpose here is to see that the roles and responsibilities are appropriately defined within the organization in terms of who is responsible for what in managing the risk. As I say, that it's everyone in the organization that has the responsibility. And the 3 lines of defense model summarizes that, okay, what are those responsibilities that exist for the people that are part of the organization. Again, it also helps to create a level of independence, because as we say that, okay, while we perform a process and we implement the controls, there has to be a level of independence. Likewise, in the risk management process also, there has to be a level of independence, so that a right view can be provided around how the risks are currently managed, or how the risks are managed in the organization. So starting with the first line of defense. So the first line of defense would include each and everyone who is part of the business, who is part of running the business, running the organization in the day-to-day affairs. It can be, it can be anyone, including finance professionals. It can be anyone who is dealing with the businesses, customers directly. So all these people, because they are the ones who are taking the risks, who are taking the decisions, so they are forming part of the first line of defense. The second line of defense would include primarily the risk function, who are providing oversight to the activities that are performed by the first line of defense. So they are also the ones who are setting up the policies, procedures, standards, which again provide guidance to the first line of defense in terms of how do they need to take risks, take decisions, and then in turn, whatever they do, the oversight is provided by the second line of defense. The third line of defense, which is an independent assurance function. So this is the internal audit function, which is providing an independent assurance to the management, to the board around the overall design and operating effectiveness of the risk management process and its components. So they do not report anyone within the within the management. Rather, they report directly to the board of directors through the group audit committee. So I would say that while first and second line are part of the management, third line of defense, which is internal audit, they report directly to the group audit committee or to the board and provide an independent assurance on the activities that are performed by first and second line of defense. So this is how the three lines of defense model operate. So I think that is all from my side, and I will give it back to CA Bindu Bansalji. Over to you, madam.
Thank you, sir. And thanks a lot for this wonderful session. Okay, so one request is that can you kindly share the PPT after the session or in between?
Sure, madam. I'll be in touch with Shivani, madam, and I'll share the PPT with her. Thank you, madam.
Okay. And as it is said that you are a motivational person or you motivate people. So I also sometimes claim that I am a motivator. And what happens that people ask me, okay, can you motivate me now and here? So I'll ask the same question from you. Can you motivate us in the next 2 minutes?
Madam, I would say that it's a very good question. And if I have to motivate someone, I have to understand, what motivates that person. So there are motivators and demotivators that exist. And, so for example, for me, a motivation can be that I am taking this session. A demotivator can be that, I did not perform well in this session. So it depends. And, for someone, it can be a motivation can be that how that person is recognized for the work that person does. So it's a very subjective thing. But to answer your question, if I have to motivate someone, I look at that. I would like to understand that person better, understand what that person's motivators and demotivators are, and accordingly work with that person to see that the person is kept motivated.
Yes, I also believe that before motivation, we need to interact with the person whom we are motivating. Okay. Thank you, sir. Thanks a lot. And with this, we come to the second session of our webinar. And we have with us Mr. Mohit Kapoor, who is Vice President, Corporate Audit EXL Services. And he will be speaking on reducing emerging technology risks. Mr. Mohit Kapoor has 20 years of high quality experience in various technology risk-related roles, including internal audit, that is third line of defense, governance, risk and compliance, GRC, first line of defense, software development, and process management roles across various lines of business. So, sir, the stage is all yours, and let us have a rocking performance or a rocking session from you. Over to you, sir. Thank you.
Yeah. Am I audible now?
Yes, sir, you're audible.
Sure. Thank you. So thanks, Bindu. Thanks for the kind words. Good evening to all my dear friends. Well, probably let's strategize what we're going to talk, what we're going to listen in next 40-45 minutes. I plan to run you all through what are the emerging and latest technologies which are surrounding us, some of those technologies which gonna change our not only professional life, our personal life, our day-to-day life, and how they're gonna change in terms of how we're gonna do audits. Now, in terms of, I mean, before even going on to that, a quick brief extension of my introduction to what Bindu ma'am shared. So I come with almost out of 20 years of experience, 18 years has been into banking in organizations like Bank of America, Fidelity Investments, and NetWest, which is RBS. So, I mean, all this while primarily into corporate audit and software development initial years. So, and then the whole journey, I've seen this whole journey when we started almost 18 years back. There was a difference between how the audits were being happen or how the audits were being conducted across industry. One, I mean, mostly audit space. I, being a technology guy, how I intruded into it and how what's the way forward for technology is what I like to start before I actually walk you through what are those technologies which are going to change our life. 18 years back when I started my journey in terms of professional journey into audit, I mean, technology was just perceived as a bystandard product. Uh, I mean, do certain general controls precisely into international banks. There was more of technology audit which was being set up. We were doing, but initial years we were doing primarily access, change, incident management kind of IT general controls. 10 years back, when this whole saga of number of frauds across globe started happening, some 10, 12 years back, we started noticing that regulators made the RBI in Singapore, MAS, in US, FSA, all these central banks started discussing or started asking for assurance on the technology, underlying technology which was being used by these banks. Technology also gained complexity. So for a tech guy, I mean, I always joined. I mean, my presumption of audit in initial years was that it's a easy to do job. And this day, trust me, I spent half of my time in reading and studying because I have to actually cater to all the central banks and regulators. I have to keep them happy by giving assurance, giving my opinion that the underlying technology is working smoothly in anything. And all these banks are day in and day out adopting new technology, may it be in cybersecurity. Nowadays, it's all artificial intelligence. You may be using chat GPT. So in case there is complex forms of AIs being used in banks. So all these aspects are adding complexity. And half of my time actually goes on to reading and studying. At times, I perceive that maybe auditing may not have been the best career. I could have learned some programming language, lived in my Java or Hadoop kind of world, and would have been living a easy life. I mean, but that's the interesting part is as soon as you find something big, it entrusts you. And some of those experience I like to share with you. For example, one of them was that even before the scam of, I mean, the recent scam in which we know that one of the premier bank PNB was involved, there was a Swift, there was a gap in Swift where somebody can actually go and change the Swift messaging codes by having the administrative rights. This issue or this finding we had already, I mean, I had myself identified around 5 years before. This was identified in India, leading to a scam. We identified when, means in terms of in terms of one of my bank where I was working, and we had actually asked for a mitigation and got it closed. Similarly, another one is where currently certain applications which you actually buy from third parties, and they cannot be assessed for certain vulnerabilities. Vulnerabilities means if they are having any intentional code, or somebody has intruded in that software with some piece of code now, and this code can do anything to actually say this code can now swipe out some money from your account, say $1 from some $100, which is not so noticeable, or it can do any. If it gets into the bank, it can actually do a ransomware, which means that it can pull down the whole of the bank till a ransom is paid to a cyber hacker. So these kind of codes we noticed. There is no actual way of identifying, and this is before Ukraine Russia war started. We noted it, and rather before, I'll say that last 2 years back there was a SolarWind attack on some of the financial institution, where SolarWind was a company which was selling one of the software to the banks. By virtue of this, a Russian hacker, it's perceived that government of Russia, through a Russian hacker, had put a malicious code, put this kind of bug in the software where they had the power to pull down a lot of banks and industries where SolarWind was being installed. And SolarWind, by chance, is a cyber security tool. So that was the power which it was instructing. And a year prior to this, my team had identified that issue in my previous bank, which was Bank of America, and we were able to. Now, there is still no solution. There's still no solution available to cater to this problem, because ultimately a third-party tool, nobody will give you the code to do a review of that code. That if there is some problem in the code, there's some issue in the code, some vulnerability in the code, nobody is going to give you a code, because it's a proprietary information. It's a IP for me. I built a code, or I built a software which either has no competition, or has a limited competition, or has a competition. If this code comes in my competitor's hand, my whole business can be pulled down, or I'll lose the competitive edge. So nobody is going to give you code. And nobody will. If there is a fault at this product or parent company, you will never be able to know that what kind of code or what kind of executable is coming in your environment. We are assured, for example, I'll be always assured that SolarWind gave me a perfect software which never had, or perfect application which never had any issue or any bug or any vulnerability inside it. I'll be always rest assured. So these are the complexities I wanted to highlight before we start, and we'll build over it. So how and what kind of technologies are changing, and so how is the auditing world becoming complex, and how technology is getting imbibed. So if you're not auditing the underlying technology, maybe some of you are auditing banks, some of you are auditing some of those firms in terms of internal audit, and some of you are actually auditing, say, let us take example of NBFCs or PSU bank branches. So all those applications at each level, right from the desk of right from a desk where those transactions are taking place, to the core layer, that is the central banking system, if those are not getting tested, and likewise, if these applications are not being tested in any kind of industry, there's a high chance of having fraudulent transactions, and not fraudulent transactions of a nature where they can actually impact something in terms of few dollars, few rupees, but it can go big in terms of leading to a systematic failure. So that is the power of modern day technology. You don't need people to do it. You just, while sitting at home, you just need to trigger it. Your system has a weakness. The intruder will get into your system, will actually ride over some weakness which you have left open, or which the which some of the institution has left open, will actually get into it, make that fraudulent activity, and you will never be able to come to know that what has happened behind the scene. So that's the essence of why organizations, why banks, why financial institutions are including technology auditors as part of their internal audit teams. This was something which I wanted to share in terms of enlightening how the world of audit is changing, why people like Mohit Kapoor got an entry into the profession of internal audit, which was always for uh, all the chartered accountants here. And so that's about the career. Now let's move into the. Let me actually share a brief of the presentation which I had for this session. Uh, Sorry, give me a moment. So we'll talk about all those technologies. I hope, yeah. So let's talk about all those technologies which are changing our life day in and day out. Sorry, let me actually make this bigger. Sure, just a moment. Sure, sorry. So what are the, I mean, why we think that, I mean, why we think that there's an emerging threat or there's an emerging risk because of emerging technologies. And what are emerging technologies? Rather, let's start from there. So, if I say you all would be hearing about a number of buzzwords these days, artificial intelligence, and some of you would be asking your children to also study those. Apart from that, you'll be actually listening to all these buzzwords in your offices, in your profession, in your organizations, things like artificial intelligence, blockchain, data analytics. So, I mean, why these are being termed as emerging technologies? So, these technologies are usually, or we can say that they are in early phase of adoption. Still, companies, banks, financial institutions, non-financial institutions, as an industry, they haven't adopted it. They are still starting to adopt, or they are thinking of adopting it in certain cases. So we are in the early part of the cycle where you're going to see that in next 5-10 years, there'll be a boom about of these technologies, which means that lot of these technologies will have lot of gaps or lot of issues currently which could be exploited by people who will be trying to get it a hold of, or who will be trying to do malicious activities or fraudulent activities. So that's the related risk, that they are in early part of adoption and they have a lot of gaps open to it. Then these are also called as emerging technologies because there's a potential. I mean, now 10 days back, Chat GPT was actually launched. All of you may be hearing this word Chat GPT at home, in offices. It's an AI tool. We were all conversant with Google till November last year. Google was my life because I used to do a lot of my work, or even if I have to do something, I'll first go on Google and then open a link from there. So Google was perceived that it will never be able to die. All the search in the world will be through Google only. Come November 2022, the world has changed. You get into a Chat GPT on a mobile phone or on your laptop, start searching it, give a question to it, it will give you everything in the world possible in a fraction of a second. And I mean, I'll say that give me some information in 5 lines. It will compress everything which is available on the internet in those 5 lines as a summary. Say, put what is emerging technology and what are those emerging technologies. You don't need to actually put your head onto it. I mean, if I do this on Google, it will give me a list of links. Then I'll go one by one, search key which is the most relevant information for me. half of them will have useless information, or no or information which I would be already aware about. But here is Chat GPT, which has actually changed the whole way of searching at least text material which is there, or which actually will help me to inform and take my decisions better. So that is where these emerging technologies have a potential to change the status quo. I mean, to bring a change in the society which is yet, or in the industry which is starting up. Also, these emerging technologies will be where you'll see the maximum investments of all the type of industries going forward. Trust me, I follow share market very closely. Day in and out, I have people whom I follow in terms of how those investment bankers are behaving, working, what they are doing. Half of them in 2022, and these are all investment bankers who are either MBA finance, who are chartered accountants primarily. Since 2021, I'm hearing most of them talking about that people in next 5 years who are not able to do data analytics, or who are not getting used to doing data analytics on their own, who are not able to do basic in advanced technologies are going to go on their own, they are going to face a lot of challenge in this new world, in terms of sustaining their businesses, sustaining their jobs. The reason? Maximum investment is going into this league of place. Artificial intelligence, I remember 22 years back when I was studying, was always perceived as a theoretical subject, that it may never actually get into shape. This is just a daydreaming, what human beings are thinking. And suddenly, we all are talking about artificial intelligence. As we are doing some research work. My parent company is doing research work in artificial intelligence. We saw that now we have moved into neural artificial intelligence, where we are trying to imitate the human brain. 5 years from now, you will see maximum investments rushing into it, and see a lot of things, or a lot of world getting changed because of artificial intelligence. A lot of low lying work getting moved out of human reach, or I'll say humans may not be required at that time. So it's a maximum investment cycles kicking in. So in these technologies, one, they are in early phase of adoption. They have the potential to change the status quo, and this is where the maximum investments are going on. And then there are a large number of new products which are suddenly emerging. I mean, uh, you may be using a number of products at your home, or all of us are using banking products. We may not be aware of about that all these banking products have mostly moved on to cloud computing. A lot of payments are being done through Paytm, etc. They are resultant of cloud computing. So then large number of new products evolving, and this is where the competition in the businesses will also evolve. And this is where, lastly, the maximum amount of risk which will come in, for which internal with audit will have to, one, get accustomed to, get ourselves ready for, and two, they will start think. Two, they have to start thinking in that direction, and three, they'll have to keep their eyes open in terms of identifying those kind of risk in these technologies before something bigger blows up. So that is what we mean by emerging technologies. Sorry. So now let's see. I mean, we were talking about emerging technologies. If we see prior to 2020, the map of emerging technologies had, I mean, this was one of the KPMG study which I pulled out for you, had only 6-7 names. See 2023 January, few days back, Gartner is the pioneer in terms of technology research. See the landscape which it is given to companies. I mean, it says so many products are coming into picture. In just a span of 3 years, the entire world is changing. I mean, see how much complex the technology is becoming, and all this when I'm presenting is for is the tech the technology being adopted adopted by industry. This is not a human technology. Technology being adopted by common man. This is all based on what will be used in industry, which audit will have to give a assurance on and reliance on. The biggest of them would be blockchain, etc., which we'll talk about in subsequent slides. Blockchain, AI, etc. So this is how the whole ecosystem of industry is going to change, right? From few names, which still continue to be the main risks in the industry, the complexity is going to rise tremendously. And and trust me, this is all related to, or this is all the resultant of our dear friend COVID. When we actually went digital, when the whole world was sitting at home and there was a need to go digital, the world has actually pumped in so much of money into technology and advanced technology, which was earlier not required prior to actually doing work from home, that it is now, those investments have started maturing, and the quantum of ease has increased, and so has the risk increased, and so has the work for audit also increased. So as we move forward, let's understand some of these words. And I'll try to be as layman as possible, because I understand some of us would be from varied backgrounds, not so exposed into technology, and has an urge to learn into these keywords. So one of the pioneer, or one of the large chunk of financial industry is talking about a term called blockchain. So what is blockchain? And if you go to the English over here, it's like block and chain. The chain which is connecting blocks. That's actually the concept on which it is built on. The whole concept is that, let's take up an example. Till now, you all would be having a house and a home registry. There were cases where your registries could be copied, and there could be any number of fraudulent activities being performed on your registries. Now, if there was no way to authenticate and to ensure that not even a one case, there are absolutely zero cases of fraudulent activities may happen, are ensured, and nothing happens in terms of somebody is able to copy a registry, create a land registry which is fraudulent, or which has a bona fide intent of doing harm to another individual. Blockchain is a method which will stop all that. So it's a way by which each transaction, maybe it's a ledger transaction, or it's a land registry, or it's a payment. When I say payment, means it's an online payment being made, which will be transacting through over internet. Blockchain has the potential on protecting all that data and making the fraudulence over there as a big zero. It will bring it down to big zero. Actually, when I say zero, it's zero. So that's the potential of blockchain. What it does is, and the biggest example of blockchain is Bitcoin. A lot of us are hearing Bitcoin is moving, right? It was how much? 8,000-9,000 rupees few years back, I remember. Now it was in COVID times, it reached out to 27 lakh rupees. So what is Bitcoin? It's an implementation of blockchain. What it is doing is, each Bitcoin is distributed over the internet. And there are a total set of 40 million or 14 million Bitcoins. Excuse me, I'm not a Bitcoin follower, but that is how those Bitcoins are segregated over internet. They are limited in number, and so is their demand rising. But what is happening is, nobody in this world is able to create a fraudulent or a fraud Bitcoin. The primary reason is it's riding over the concept of blockchain, where every Bitcoin has been stamped or has a mechanism where nobody can alter its basic identity. So if the identity is, let's say, give it a number. Say, give it a number 101. If I have given a Bitcoin number 101 to uniquely identify nobody other than its owner can identify or can actually copy that Bitcoin. And that is the reason, whilst Bitcoin is still over the internet, nobody is able to actually change it, copy it, or alter it. And that's why it's considered a safe investment from the fraudulent activities perspective. Not, I mean, I can't comment on whether you should be investing onto it or not, but it's an example which I want to say how secure is the blockchain implementation. Currently, you will be surprised to know government of India is mapping all the land in the entire country since last 3 4 5 years. I know that, and the biggest world's biggest blockchain implementation is underway, where they are now using that mapping information. They're gonna identify, or they're gonna actually, I mean, are all the land registry process is gonna go on the blockchain. Nobody will be able to alter that property. So in nutshell, blockchain is an implementation which is aiding in protecting data. It's in very early phases of adoption. We are still adopting it in early part. A lot of fintech companies have started using it, and you will see that some of its use will be increasing as we move forward in coming years. The biggest is that the biggest uses of blockchain is that it helps in verification and identification. So it may verify a customer and identify a customer, which is an activity currently being done. Say you get into your online banking password, you verify your identity before the bank allows you to make a transaction. So blockchain will assure, and still people are able to hack your accounts. So, I mean, with the aid of blockchain, the verification and identification of transactionaries will become foolproof. And so it will also aid in recording transactions, signing contracts. This is what we contracts will become. And of course, the important part is all these transactions and contracts can be then actually you can identify who all have been the participants or parties to it. For example, if it's a land registry, it will show you right from 1950 till 50 years from now. If you move forward and you are selling your land every year or every 5 years, it will be recording its new owners, and those owners cannot be altered. So, in terms of that, the financial institution. So, if I go and take a home loan, and if I surrender my registry to the financial institution, it will be able to see all that trail. Courts will be able to see all that trail. So, just the power of the blockchain, that if there is somebody in between, you cannot delete it records. So you will have the complete chain of all that records. But currently, as blockchain are evolving, we are still identifying what are the related risk involved into it. One of the biggest risks is, of course, if somebody has is some user gets into the inappropriate access on the blockchain implementation. Say somebody still gets into your wallet and siphons off your Bitcoin. So that's user access kind of a risk will still remain. But yeah, blockchain early part of adoption, and new risks are yet to come and emerge, for which audit has to make its eyes and ears open. Next interesting technology or emerging technology we're going to talk about is cloud. You open up any news channel, at least once a day, suddenly I'm seeing everybody has started talking about technology. News channels, CNBC. I open, or you even go to a party where you find even one technology guy or parents talking to their children that, okay, you do some certification on the buzzword called cloud. What is cloud all about? Previous to few years back, anything in terms of a organization, in terms of let's say a bank, a financial institution, or any kind of company, any kind of whatever has to happen, or everything in terms of systems, a laptop, a server, any kind of system which is enabling any kind of transaction, any kind of, when I say transaction, means business in an organization. It was all done through a hardware or infrastructure lying within my organization. and it was as costly as anything. So a server used to cost lakhs, and at times in crores, and there used to be very complex infrastructure, things like routers, switches, firewalls, all that infrastructure each company had to buy in each time they want to expand their business. So expansion of business was a costly affair. Owning of and computers or systems were becoming complex, and so there was a need, and a new kind of risk was emerging. Cybersecurity. Um, uh, I mean, there are so many solutions. There's a wireless access firewalls, WAFs. There are NAS kind of storages. So I mean, in nutshell, there was that as the technology was growing in, the capital expenditure was going in, and so was opex growing in for most of the companies, because technology was either mostly a capex, but at times mostly a opex, but at times a capex also. My expenditure was increasing, it was hitting my top line and bottom line both, and there was a need felt if we can have the efficient way of work. So came Amazon few years back, and Microsoft in terms of Azure and AWS, and now we also have Google in terms of Google Cloud. I mean, the word or the technology of cloud was evolved, and these are the three pioneers in that. Now, what happens is I don't need to buy so much of infrastructure. I need to buy basic infrastructure which gives me connectivity to a cloud provider, and I, by paying small amount of money, I can use all these services. I can deploy my applications, my softwares. I can use so complex infrastructure at peanut cost, at very minimal cost, by going onto the cloud. And suddenly the adoption of cloud has started shaping up. Also, another effect of cloud has is that it is making all the transactions faster. So all of the apps which you are nowadays using is based on cloud. Had it been a conventional technology, apps would not have worked. The reason, on a click of a button or on your mobile phone, you go and click a app and you instantly get something. You want to make a Paytm transaction, button, transaction is made. How that's possible? If it would have been a server lying over 1,000 or 5,000 kilometers, the lag of a transaction going, hitting a server, the response coming back from that server would have at least taken few seconds or minutes, if not minutes. But what cloud has done is, now cloud is, because it's available over the internet, the response time is fractions of second, and the user experience, whatever you are experiencing, the cloud has made it significantly better, and all these apps, all these new generation applications have become a hit. So thanks to cloud, all that user experience as well as the cost of doing a transaction is coming down significantly. The main consumers of cloud, I'll not say, cloud is being currently consumed by every kind of industry. And in next few years, if some of the industries or some of the companies who haven't still moved on to it, they will be forced, because you cannot operate in such a competitive environment with such a high cost. Cost would be one of the essential driver, which is one bringing every company onto cloud, or is going to bring each one of us on cloud. When I say each one of us, each company on the cloud. Currently, the cloud is currently being used for banking and payments. One of the example I shared was Paytm. All your online transactions which you see are quicker, faster, courtesy cloud. And they also, some of the trading activities, if you are all aware about this new buzzword, algo trading, or high frequency trading. I'll not say algo, but a high frequency trading is getting implemented because of cloud. Because in high frequency trading, if say currently I am a user of a HDFC account or ICICI Direct account, you will see that I select a trade. I select a trade, say buy ICICI Bank share, and the transaction takes few seconds. In that few seconds, what happens is that say a share moves from 101 0.5 rupees to 101.7 rupees. It may not be hurting me, but what it does is that 20 paisa cover or that 20 paisa lag is a huge business opportunities for investment banks and for such financial institutions. They play on this 20 paisa using high frequency trading. As you book a trade on 100 rupees and 50 paisa, say put 1000 units for purchase, it will actually, and it sees that 1000 units are about to hit the exchange, the high frequency trade will go, which is using cloud. They will see that 1000 number is coming. They will quickly give 1000 at 150 rupees. They will buy that and they will sell you at 100.7. So suddenly you see that the prompt comes that 20 paisa, there is a jump in the trade. In that meanwhile, as you click on, you say, okay, 20 paisa doesn't bother me much. Let me go ahead with this transaction. You buy that and you actually, uh, uh, I mean, that 20 paisa comes as a profit because of this high frequency trading to the financial institution. And this is where this whole game of fast and effective and efficient system is coming into picture, courtesy cloud. Next important technology which we've gone about is cyber technologies or cyber security. Few years back, the only information security which we were quite conversant were either I need to patch my system for an antivirus, or there were or there were firewalls which could save me from some threats, or I'll say mischievous characters reaching into my systems. No more. It's such a simple world. The world has changed tremendously. Cybersecurity has become one of the number one risks for every financial institution across the world. And if I say not only financial institution, for any kind of institution and organization, cybersecurity, if you are selling through internet, you can be brought down in a fraction of a minute. And then you may even have to pay ransom to actually give your information back. So, for example, you are running, say, you remember, if let me remind you, a few days back, AIMS was actually hit by a hacker. The hacker had actually got into AIMS server, and then your data or our data, each one of our healthcare data was lying in AIMS. They had actually encrypted that data. They encrypted our data, which was lying on that server, and were not ready to release that till a ransom was paid by the government of India. I don't know what happened because that news died out, but that, I mean, most of the hackers and a number of companies, you can open up and search over the Google, you'll see the quantum of companies, some of the biggest and best companies in the world was hacked. In recent times, they had to pay ransom either in money or in terms of bitcoins. So that is how the complexity is being built out. Another example of cyber security is distributed denial of services attacks, called as DDoS attacks. I'm your competitor. I know that between 6 to 9, you actually do a lot of business through your website. You're Myntra, and I'm some XYZ site, or you are Flipkart, I'm XYZ site. I know between 6 to 9 maximum in the evening, maximum set of people hit my server. Let me actually go back and at that time start throwing tons of data or tons of pings on your system so that the real customers are not able to reach your website. That kind of cyber attacks are called as DDoS attacks. And these are few examples of it. So there are so many complexities on cybersecurity, so many kind of threats emerging on cybersecurity. Cybersecurity would remain adoption of new tools, new applications and technologies would be the centrifugal force for next few years at least to come, where we will all be trying to build the posture or the cyber posture of our respective organizations. And so there'll be a big, and so relying only on cybersecurity teams will not be the way to go. audit will have to play its part. We do in most of the organizations, we do cybersecurity audits because boards are asking us to look into if how cybersecurity teams are working. Is there adequate infrastructure? Is there adequate amount of governance built over it? And that is where this remains to be the key emerging risk for us in the future. Next one to talk about is artificial intelligence and machine learning. This is where I was talking about our future is going to change. We may laugh at it, we may deny it. Until November, before November 2022, I was never so inclined towards artificial intelligence till Chat GPT actually came into picture. And then I started realizing if Google could be made or Google can be done away with so easily. And guys, honestly, why I was a worried lot was because I have invested into Google stocks. And when I saw that artificial intelligence, I mean, actually sold off the entire lot for at least few years to come. I see the parent company of Chat GPT, online AI, to actually be a threat to that. And this is where it will be the way which gonna change the whole of the universe, I mean, human mankind tremendously. Things like, I mean, some of the use cases would be, last evening Microsoft announced that it's gonna integrate Teams, and so has Zoom announced that it's gonna integrate, as we speak, a new application which will take minutes of meeting as we'll speak, which means it's not going to type exactly what I'm saying. It's going to identify on the hindsight that what is the important aspect out of this of this guy Mohit, which is speaking. What is the takeaways and what are the information kind of things is going to bucket on its own intelligence, which will be, of course, not close to human intelligence, but they will try to bring it to human intelligence, and it will automatically publish the minutes of the meeting. So in nutshell, the kind of jobs or the kind of there's a big threat to the low end jobs. Say example, call centers where people were actually answering calls. You will not need call centers anymore. I mean, you will call up one of my last organization, Bank of America. We had replaced human contact centers courtesy artificial intelligence. We have an app called Erika, which came 5 years back. You call up, you do any kind of transaction, you will still feel that you are talking to a human being. You are talking to a machine. It will do. It will tell you last 5 credits, last 5 debits. It will identify. It will actually authenticate you, or to allow you an entry in the online solution, in the online banking, via just recognizing your voice. Once you're authenticated, you can do any kind of transaction which you need to do without even typing on it on your laptop, and it'll. I mean, those transactions or those commands would be executed on servers automatically, and it will publish everything. You ask for your last 1 year kind of a summary of your transactions. It will throw you everything possible. So that's the power of artificial intelligence, and this is where the maximum, come 2023, you will see maximum amount of transactions happening. Even if we go back on this Gartner scale, if we see Gartner, you see responsible AI, decentralized, sorry, then there is hyperscale edge computing, which is a feeder to artificial intelligence. Neuromic computing, which is that, I mean, we are trying to imitate brain. Generative AI, which is Chat GPT. So all this AI avatars. So this is where metaverse, another form of AI, where Facebook and Google and Microsoft are heavily investing onto it's using AI tremendously. So this space is also, you will see, is talking about AI tremendously. Compare it with previous to 2020, only 34% of people were talking about or seeing artificial intelligence as a technology risk. 47% of people were talking about mobile applications and similar things. So, I mean, AI is going to change the world altogether as we enter 2023. And this is one of the key emerging risks for which we'll have to train and get ourselves accustomed onto as we do technology audits or as we do auditing of the respective institutions. Last but not the least, I would wish you to familiarize yourself with Internet of Things called IoT. Now, uh, let me help you with understanding or understand what is IoT all about. Uh, you go to a store. Most of you go to stores like Big Bazaar, Reliance Bazaar, etc. for doing your shopping. And this is a physical store I'm talking about. You go to the you go to a Big Bazaar or a Reliance Bazaar. You pick up your stuff. Say you want to buy a kg of sugar, you want to buy a kg of rice, and there are 20-25 items. You pick them up. What about you, as you are picking up on your app? I'm showing you what you picked, how much quantity you picked, and how much and what's the cost. And as you reach the counter, it will automatically deduct that man. Oh, sorry, it will give you your published bill of whatever is lying in your basket. You make a payment, and the transaction is done in fraction of seconds. How that's possible? It's all about IoT, Internet of Things. IoT, another example, you remember, you see the tags behind your clothes, which gives a beep on the counter when you if I say a person picks up a cloth and tries to steal that cloth from the shop. Nowadays, there is a beep. There's a magnetic chip which results in a beep. That's IoT, Internet of Things. Uh, uh, if all these artifacts are sticked with a IoT device, it will actually give you a bill, and that's not artificial, guys. That's something which Amazon has done it across US. They are building up stores which will have these without human kind of stores, which will actually using IoT will give you a seamless experience of shopping. And thus, another form of IoT is your most of you would have started wearing some smart watches, which gives how many steps you are doing, how much calories you have burnt. All of those are examples of Internet of Things. All of that, it counts. It then publishes on the internet over the page where you want to see, and it records all your heartbeats, all your vitals. It on a daily basis, it keeps a record of it, and in case something actually is wrong, it may actually give an alarm to you that say attend it's your blood pressure is rising, your heartbeat is rising, or it may even you may even go back and look into that I have not completed my number of targeted steps in a day. So it's all Internet of Things. It's a chip based technology. Number of devices are being inserted with chip, which with the use of internet are connected, and you can see your all the workings and all the transactions online. In industry, I gave a certain general examples. In industry, it's being used one heavily in the fraud detection. Uh, 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 any kind of say industry where say there's a containers industry, where there is railways, in logistics, these aspects are leading to fraud identification and reducing the similar kind of expenses. Again, another use is mobile banking, where it's actually again impacting fraudulent activities and of course the risk management. Those three are the primary examples where it's changing the dynamics of the whole of the industry. So these were the few examples of emerging technologies which I wanted to help you and understand. And that my objective was that each one of us is able to attain these words at least from this conversation. And as we move forward, what are the kind of the risk all these emerging technologies we spoke about are bringing? We spoke about cybersecurity. It's increasing the information and cybersecurity risk. It's increasing data privacy risk. Your data is at risk because of all these new technologies. These are all complex technologies. All institutions are storing either their customer data or their institutional data. There's a high possibility because of heavy interaction of these technologies through internet, somebody with a malicious intent can intrude and can siphon off that customer or institutional data. Data privacy is one of the emerging risks because of these emerging technologies. Another is regulatory risk. Regulators suddenly, I mean, it may be, say in Indian context, I say it's RBI, in US, FSA, in financial industry, non-financial industry like CDSL, or it could be SEBI, or even aspects. You'll see that sooner, even labor departments across the world will have the regulatory requirements, because that's the potential of these technologies changing even the labor market, other than the financial market of which we are currently either auditing or plan to audit. So regulatory scrutiny is going to go up because of these technologies. Anything wrong using this technology is a big headline risk, is a reputational risk. Has the, I mean, it has the ability to tarnish the image of a lot of the organizations. We was just speaking about a Nirav Modi scam, Swift scam. It tarnished PNB's image tremendously because of that small breach or small vulnerability which existed in the Swift system, which was exploited by only one individual, some who was doing this work. So a lot of these vulnerabilities are not identified by common people, but if in it case it's identified by one person who misuses it, the extent of misuse, how much it cost by one person who was able to, I mean, pull down whole of the PNB's reputation immensely by doing those LCs and clearing of those LCs and other kind of instruments which were cleared in favor of Mr. Nirav Modi. So that's the headline risk is going to increase because of all these emerging technologies. Systematic failures. One, I mean, say now, if my business is using artificial intelligence to do contact center, call center, if that artificial intelligence application goes down, there's a resiliency risk that it may actually lead to the whole of the application, whole of the institution, whole of the organization going down for certain period of time. Say, I may not be able to make my transactions through Paytm, through my online banking, ICICI, HDFC, SBI, any of the banks. So if one of that online banking application goes down, if cloud goes down, if Amazon is not working for an hour, most of the Indian banks will not be able to make a transaction. That's the resiliency. That's a high risk. We need to ensure that our existing organizations are planning for resiliency as they plan for their business. They cannot have only dependency on cloud, only dependency on one kind of technology. The technology landscape has to be complex. There has to be resiliency built into it. But the risk of, with these emerging technologies coming into shape, the risk of resiliency will increase. And so will be the systematic failure risk increasing. One of these technologies, any one of these technologies has the ability to bring down in any institution's business in no, I mean, and it can even lead to a bankruptcy in no time, in couple of months, couple of days, couple of weeks. It can lead to systematic failures because there's a high reliance on technology these days. And these newer complex technology, they are more complex. Business may not be able to understand, strategies may not be aligned to it, and it may lead to failing up of a number of institutions. And so is the cost of operating because of these emerging technologies gonna go up. The competition cost will go up because either my competition will adopt these technologies and it will force me to adopt it, because my customers will ask for a better experience. My customers are gonna ask me to deliver quicker solutions, better solutions, with a better user experience. So my competition cost is going to go up, which is another risk emerging from these technologies. Now, one of the key aspects which I would like to discuss with you all is what kind of controls you should be auditing on, to at least how complex the technology is. At least few controls are very vital to any kind of technology, may it be cloud, artificial intelligence, may it be cybersecurity. IT general controls at least should be very well understood how they can aid in reducing the risk for these newer age technologies. So, I mean, they should be applied to all IT systems, whether they are applications, operating system, databases. At least the end aim is that the customer data, the institutional data, that's kept secured. At least that is not breached. That's the main aim of IT general controls from that perspective. In that component, I will talk today about two IT general control areas, which is one is user access management, how user management access management should be implemented to cater to any kind of technology, especially new emerging technologies, and how second is how change management should be brought into picture, because your organizations will be actually adopting to a number of these in emerging technologies, which is that they will be including a lot of technology change in their landscape or in their ecosystem. So the key, let's talk about user access management for a quick 5 minutes. User access management, the main aim is to regulate who has access to the systems and to the data. You cannot give the access. Say you are an online banking user. I'm giving online banking because most of you are conversant. You do your online transactions. So online banking transaction, it gives you, you have access to only your system. You don't have access to any other customer. May it be any technology device, new technology, conventional technology, access needs to be limited so that nobody is able to do anything more than they are required to do. That's called least privilege access, least privilege management. We'll talk about it. But before that, there are three components of user access management. What are those? One is for the user access management, there is an authentication. Over here in the slide is the second point called action. Authenticate. As a user, when I go to an online banking application, I first type my username and password. What does the system does? It recognizes, am I a legitimate user? Am I the one who is the right candidate to enter in that system? And then it authenticates and allows me to get into that system, and I'm able to thus perform my transaction. So that's called authentication. The first step for access management, or the first component of access management, is that users, may it be online banking, may it be your infrastructure users or operating system users, your artificial intelligence system users, your operating system users, or database users, everybody should be authenticated on each device. Means their accesses have to be made unique on each device. Second component is authorization. When I actually authenticate, for any activity to be allowed, say I make a transaction of say 1,000 rupees. If I have a credit limit of 1,000 rupees, I should not be allowed to make a transaction of even 1,001 rupees. Similarly, if I am authorized to make a transaction on a server, a hardware, infrastructure, or operating system, I have to be authorized by, in terms of my identity, that this person who has been authenticated is authorized to perform this activity, and the authorization should be given in by the system. And the third component which aids in doing this authorization is called as access control policies. Policies which are defined in the hindsight of the system, which allows me to perform these transactions, which authorizes me to perform these certain transactions. Those policies are set on the hindsight. Those policies are called as access control policies, which should be audited by the auditor. One, what should be audited by the auditor? Whether the system, the authentication is working appropriately. For each user, it's actually giving the right output. It's allowing the right set of user. If I'm putting my username and passwords, it's allowing me entry into my system only. Authorization, that it's allowing me to do the kind of activities which have been permitted to me or which are aligned to my name. Say if I'm a customer to a bank, I can only do transactions. I should not be allowed to make changes in the payment of any other person who is having the account in the same bank. I am not authorized to do it via my online account. So it should actually see that what the system is authorizing me to do, and then I should be testing that with all. I mean, are my policies, access control policies, current? They have been set up, and how they have been set up. So those are the three components which I need to do in terms of my user access user access management. And I mean, some of these lies in the role-based access control. I mean, that's one of the key control in terms of the user access, which we spoke about in terms of authorization and access control policy. The second one is the least privilege management. I should be having, if I have to perform one set of activity, I should be only authorized to perform that set of activity on the in the system. Say, I'm a banker. I can only I can only issue checks till say 10,000 rupees or a lakh rupees. Low transaction, I can only approve low volume, or I can low value transactions till 1 lakh rupees. I should be only authorized to do transactions till 1 lakh rupees. It should not be allowing me to make transactions of a lakh 50,000 or a lakh or a 2 lakh rupees. I mean, that should be the credit limit. That means which is that I'm actually getting authorized. I should be having the least privilege. On a server, if an administrator is allowed to only create user IDs and password, that person should not have access to any other module on the infrastructure. If a person is allowed to configure an application or to make changes in an application of a certain nature, that person should be allowed to those set of limited commands. If a database administrator is allowed to make, say, is allowed to insert or perform delete operations, it should be only allowed. They should not have, say, a modify. If say insert or a modify, they should not be allowed to make a delete, or then they should not be allowed to delete a transaction. So that's called the least. How much I need, I should be only given that much privileges to do my work. That's called least privilege management. And lastly, user provisioning and deprovisioning. I should be allowed to provision accesses. Accesses should be controlled. They should be provisioned. Everybody and anybody asking for access on any system, that kind of culture should be prohibited. We should be testing against that. Say, say there are 10 people in the organization. Are they all 10 having access? Two people are, let me refine my example. Let me say only 2 people out of the 10 people in the organization are required to have access to an application. I need to test whether those 2 people who are having access, were the access permitted to them, or those 2 people are having, or one of them is having malicious access. By design, he or she was not entitled for that access, but that person got access to that system. That's the user provisioning. We should be always auditing whether the correct set of individuals are having appropriate accesses to access a system or an application or an infrastructure. And similarly, deprovisioning. As soon as people leave organization, user IDs or user accounts are the most common way of, or stale user IDs or accounts, if they are not deleted on time, they are one of the important source where hackers exploit them. So my deprovisioning, and then they can also lead to some fraudulent activity. Say, if I had a user ID and password, and so one of my colleagues knows that I have left the system, they can go back after I leave this organization. They can go back, make some fraudulent transaction, made some fraudulent activity through my account, and the audit trail will always be that it is done in my account, and you will never be able to identify the correct culprit. So that is where the deprovisioning, whether the user IDs, the accounts which have been configured, are being appropriately deprovisioned, or I'll say that they are being deleted on time or not. That's another important control. And finally, it's the user access reviews. All the accesses which have been given in any institution, in any organization, should be periodically reviewed, quarterly, 6 monthly, or whatever frequency has been set up, they should be reviewed periodically. And as an audit, I should be reviewing whether the access reviews, these reviews or these accesses are being reviewed by appropriate person. Ideally, it should be the line manager or the infrastructure owner. So all these kind of people who are the owner of that entity, or who are of the infrastructure, or who have the line management role, are the correct set of people are reviewing the accesses and at correct appropriate frequency. So those are some of the user access management controls. And lastly, we move to change management. Change management has an objective that any emerging or conventional technology, if you are trying to integrate that technology in your organization's ecosystem, it's a change. Anything which changes the status quo of technology in the institution is a change, and change brings a lot of risk. Somebody can, in terms of the three keywords of integrity, confidentiality, and availability, either the change can actually make my system open to a lot of threats, or because of a change, I can lose data of my customers, my business data, or because of a change, my system may go down. I'm making a change in the banking application, and because of that change, the whole say ATM system across India goes down. That could, I'm changing the software of ATMs, which is being pushed by the wireless mechanism of communicating in all the ATM servers of a bank. If that application has an issue, if that ATM software has an issue, for some time all the ATMs will not be available. That's availability. So my changes have to be controlled. So in terms of control, that's the primary objective with which audit should be testing on the change management. So what are those types of controls which we should be auditing? Any kind of change which is being opened, first it should be documented in a change request form. So that change should be recorded. Any request for change should be recorded. All the details of that change should be given. And importantly, what is the impact of the change? Is one application changing? Is one laptop changing? Is this changing 10 laptops, 100 laptops, 1,000 laptops? Is it changing one server, many servers? Is it changing one database or a number of databases deployed in my organization? So what's the impact of the change? That should be also well documented. Then is the impact analysis is that change correctly? Is that change impacting the magnitude of the change? Is that controlled? Is this authorized? That should be assessed. And lastly, all the changes should be authorized. They should be approved. So as an audit, I need to check whether the change which went into the live system has been authorized or it has not been authorized. And then basis this authorization, was the change implemented on time by the correct set of people in the correct environment? When I say environment, it means the whole, on the correct server or on the correct database, was it implemented? And then after the change was implemented, was a review undertaken? Say you made a change, say you changed the online banking application, and once that online banking, after I made that change, Mohit Kapoor logs into the online banking application, and I see data of one of you, say Bindu ma'am. Is that authorized? Is that correct? No. So for that to ensure such kind of mishaps does not happen, there should be some kind of post-implementation reviews where I ensure that the change has been implemented correctly, the correct set of data is flowing through all the attributes. So that is called as post-implementation review. And we should be ensuring, one of the important aspect which audit should be looking at is the post-implementation review happening or not? So these were the few examples of change management or change management controls, which I wanted to bring in your notice. So with this, I like to summarize. I come to to the last part, or I come to an end of my session. But before, I leave a quick summary. We know that a lot of technology is going to change, is changing, and is going to change in the near future. We need to adopt because that's the forced change on all of us. Otherwise, our companies will not become profitable, will not remain profitable, or there will be a massive downfall in terms of my profitability. Or I may not be able to sustain my competition. So, escaping this change is not a good idea. Adopting is the only way forward. And as you are adopting, the audit will have to also make themselves more sophisticated in terms of adopting or understanding these technologies. And at the end, IT, at least the minimal which auditors can do is adopt to IT general controls or review these technologies with from the perspective of IT general controls, where user access management and change management would be at least the most vital part which you should be reviewing and auditing on. With this, I come to the end of this part of my session, and would love to hand it over back to Bindu. Thank you. Thank you all.
Thank you, Mr. Mohit sir. And it was one feedback I have received is that it was very nice presentation for new emerging technologies and risk, and good examples given in the presentation. And I too believe, sir, that every profession and every field need to go hand in hand with technology. And artificial intelligence has really changed the world altogether. And I think that cloud computing has put all the professionals on the cloud nine. And this Internet of Things was really a new thing for all of us. And it was a great session. So I have two questions for you. One is that how we can prevent financial irregularity in insurance sector. What types of frauds are threats in insurance sector? So this is a question.
Sure. So, see, whatever financial sector we are all from, whether it's banking, whether it's insurance, the major threats remains the same. All the insurance companies are adopting. As I start thinking, when you see or when you want to perceive any threat, become a user of that. Say, I have an insurance. I'm a consumer of an insurance. Say, I'm a consumer of LIC or ICICI Prudential or whatever company I am. What I do, I make my payments or I do any kind of transactions as an end user with that insurance company through online, which means the biggest threat will still be cybersecurity for any financial institution, including insurance. Number one, I'm saying, would be cybersecurity. And trust me, for next 3, 4, 5 years, as the world is becoming more complex, the consumer will be experiencing your business only through internet. And if there is internet, there's a high chance that I will be getting breached either today or tomorrow. So I have to make my cyber posture very, very efficient. And that is where cybersecurity becomes my first primary technology risk. The second important risk from that perspective is that I deploy a lot of changes. Any new product you bring in insurance, you are launching it to the public. You're not launching anymore it onto the paper using a prospectus. You are making your users, any kind of insurance product is published. When I say publish, it doesn't mean it's detailed giving on internet, which means I give a detailed overview, and then I put a calculator for it. I put a mechanism through which you can experience how will you feel with that product. Any kind of insurance product, say you choose 5-year product, you get a list. So that's also a product in the application world. For any kind of application world, as it's emerging, as the new technology is emerging, change management will still remain the core. Most of the companies are missing on basics as they move on to the new emerging technologies. You cannot do away with basics, and in basics, change, you will always be making change in your technology ecosystem. So change management will still remain the biggest threat from the technology perspective. From the business perspective of insurance, you will see that a lot of things, as my current organization does a lot of work in insurance, in terms of TPA, a lot of new products are emerging, which are doing what it's doing. It's helping in terms of increasing, expediting on the user experience, reducing the cost of those products. So the second basic fundamental or the change would be that as you move onto an online world, straight through transactions, even straight through booking of your insurances, till you generate a policy, till it is dispatched to your customer, everything is now automated. Automation means that there'll be a high chance that if one of the aspect fails in the middle path, your whole system will be pulled down. So resiliency will be the number three risk which your businesses will still perceive or remain. And that is where I tried to cover today all these three major risks, at least for all of you.
Sir, one more question we have. Can you further enlighten us that when you had already pointed out the loophole in SWIFT, which lead to a major fraud at PNB, why was it not acted upon by the concerned authorities? And
Sure.
who, in your opinion, was responsible for not acting upon or delay in taking action when the vulnerability of system was already pointed out?
Sure. So this example, that was not for PNB. What I was trying to emphasize that in my as one of my employer, we had identified, which was a MNC bank. We had identified this vulnerability long back, and this was and I think most of the audit departments in most of the MNC banks had highlighted a similar breach, because we have a very affluent or very structured technology audit, which is part of the business audit, internal audit, when I say that. So this vulnerability was long known. Now, what we see or what we perceive is that as we get more technology advancements in India, the problem is, and trust me, that's a problem which even I face in hiring people in technology audit. People are not adopting that skill set, technology audit skill set, and that is where the government banks or number of institutions in India have a problem, that the mindset is that the audit is only to do with financials, with numbers, and nothing happens in technology. Most of the business processes have been automated. They are highly relying on the technology. So if you are only auditing numbers, there'll be one day we all will be penalized, because some or the other day nobody is leaving us. Those hackers, those mischievous characters are not going to leave us, that if we haven't audited that, we're going to actually remain, they're going to remain calm with us, they're going to leave us. So it's very important that either audit builds up on the technology audit, and which happened in the PNB case, where we found that number of our financial institutions are very weak in when they had to actually do technology audit. For them, technology is still not to be a subject of review or subject of audit and subject of assurance, or the subject, or there's a competency issue. And I will be very candid about it. I mean, you may not like it, but it's a competency issue across as a nation, because I don't see, I worked in almost entire APAC and with so many US regulators, that other countries than India, maybe Singapore, Hong Kong, maybe US, they have so much of technology auditors aligned with business auditors. When we talk about internal audit, that India is still to catch up. And this is, I intentionally highlighted PNB example so that we can share that it's a way miles to go for us in terms to accustom ourselves with the one technology advancements to, and some of this which I was sharing as a PNB example was a basic. If you would have sit down with the banker for, I said, 1 or 2 hours, just shadow him how that access has to be set up. I mean, that was the way even I identified. One of more example is uh, most of us are Windows users. I mean, and all of our banks in India are running on Windows platform. Have our banks gone back and tested? I mean, this is what we tested in audit. Another example I like to share. Have our banks gone and tested the last mile? My payment has been approved by the bank. For few seconds, it sits into the system administrators folder before it is moved out of the bank to the central bank. Let's take up example, say RBI ko jab tak hit nahi karta. So over here, the payment is lying for few seconds. Few seconds means 20 seconds and 30 seconds. The Windows administrator of this system has the access to alter this payment because this payment is neither encrypted. I can see that the name is Mohit Kapoor, account number is 101. It's a payment of 1 lakh rupees. Let me change either the payment, or if I have a mischievous character, I'll change a payment. I will either transfer it into my account. It gives me a number of opportunities. I have the ability to do it. It's a simplest aspect, but nobody thinks about it. And this is where there's a need to audit the technology implementation. That is there a potential for similar kind of fraudulent, and which happened in the case of PNB also. And the primary reason, I'll not blame the regulators, is the negligence and some of the negligence which as the whole of the industry, I'll say our because I also am part of it, which we all have, and we are failing to groom our people into the technology audit skill set. I mean, and trust me, it takes me 6 months to hire one technology auditor in my company. I have to almost screen 500 to 600 people, which means at least 500 into 30 minutes if I have to interview. And then I'll be able to get a very average kind of person whom I have to invest my time to grow. That's the sorry state in terms of technology auditing. And that was my humble submission, as well as my contribution, that if I can help this forum in terms of enlightening in some of these technologies.
Thank you, sir. One last question we have. How we will be able to move from one cloud service provider to another? If we are not satisfied with the former, it may become a huge task. So this is the last question.
Sure. So see, internal audit has to start thinking strategically. That is very important. We should not be giving only assurance on whether the transactions or transactionary things are happening fine or not. Another important area which we have to focus from the audit, and we write issues and we tell management on strategy also. One of the strategy, as your company is adopting cloud, I mean, early as an audit. So if you are doing a readiness review, if you are doing an audit, during as the cloud is getting implemented, or even post cloud is implemented, one of the finding which you should be writing to your management is that you are using one cloud. It's next to impossible. There's a big war between technology companies, Google, Microsoft, Amazon. They are fighting for a chunk of layer. They're not allowing any other company to get into it. See your mobile phones, Android to iPhone. I mean, they're not allowing you to make that hop. You lose your lot of data. And that is where the cloud is also having a big war amongst businesses. And these pioneers will not allow that interoperability. Though interoperability could be built in, it's a heavy cost. The interoperability needs to be built in, though it's a heavy cost, because one day when you will start feeling, say, who knows, Amazon closes out. Who knows, Microsoft exits cloud business. How will your cloud sustain? It has to be an interoperable environment. If interoperability is a very costly affair, if your businesses tell you ki, I mean, doing interoperability is a costly affair. Then it should still have an environment where some percentage of your infrastructure is on premise, which is in the conventional way of operation, and some is moved to cloud, where you actually reduce your some part of your cost by going on cloud, but you have an alternate that in tomorrow morning, if you have to hop all that business from cloud back to your environment, it's possible. So audit should be writing an issue if you see that it's a single cloud-based environment and you are moving everything. You will be on a mercy. Someday Amazon will say, the services which I am giving you free today, I'll start charging you 1 crore rupees a month. What will your business do that day? We are not thinking far-sightedness. That's the far-sightedness in terms of issues we should be writing for on strategy also. I hope that helps.
Thank you, sir. Thank you for giving your precious time and sharing your insightful words. With this, we extend to the third session, and that is to be given by CA Ram Prakash Shankaraji, who is a Vice President, Corporate Audit, Fidelity Investments. And he will be giving his session on big data and analytics in financial services industry. Mr. Ram is a leading internal auditor for Fidelity Investments, international locations, and responsible for developing and implementing the internal audit strategy. Prior to this role, he was a member of the risk and compliance leadership team in Fidelity Investment, and he was responsible for the oversight of Fidelity compliance with regulatory requirement. So let us all put all the attention towards Mr. Ram Shankara and hear what he has to say. Over to you, sir.
Thank you, ma'am. I think maybe I before I share my screen, I start with few thoughts. I think Mohit has kind of set up the stage beautifully for me in terms of how do we need to take this for session forward, because we are really talking about big data and data analytics, which is kind of a next arm of technology, right? I think few reflections from what Mr. Mohit spoke about, which is more in terms of how audit is viewed as a traditional auditors doing more of a financial audits versus the current generation where we are expected to play across the turf, whether it is technology, whether it is regulatory, whether it is resiliency. I think there are multiple aspects as auditors we need to look into, and not the traditional financial audits. I think that's a wonderful thought, which Mr. Mohit has shared, which resonated very well. And the other thing which kind of resonated very well for me is hiring technology auditors. Mohitji, we are not too far. We are also kind of facing a similar challenges in terms of finding the right set of talent in terms of technology audit and technology audit landscape, because it's niche in nature, and at the same time there has to be a lot of investment which we need to do, if we need to kind of convert our traditional business auditors into a technology auditors. I think I think definitely the future looks like it's for tech auditors and data analytics and big data. With that, let me kind of kickstart my session. Allow me to share my screen. Hope everyone is able to see my screen. So the session is big data and data analytics in financial services. So we have two components here. Let me quickly jump into the agenda. So first, we will talk more in terms of some of the key terms. I think I want to just demystify some of the key terms which we keep hearing in the industry, which are the buzzwords at this point of time, which is related to data. And once we kind of do the basics, then we understand why data is the new superpower. I think everyone agrees that data is our new superpower. And once we have our superpower, it's going to boost our business. Let's talk a bit in terms of how it helps boost or improve our business. And at the same time, what is the regulatory dimension of the data? And I want to do a deep dive or double click on auditor's perspective, because when we are auditors, like I want to take this into two dimensions. The first one being, as auditors, what are the aspects we need to look at when we are auditing the data, whether it is data lake or data transmission, data security controls. We will talk a little detail on that. And at the same time, how we can leverage data to do a lot more meaningful audits and help our business and succeed our business objectives. So this is how I want to kind of narrate my session for next 30 minutes. Just to kind of a quick recap. First, we're going to like start with the basics of tech key terms, then why data is our new superpower, then how it is helping the business, more of a business dimension, then a regulatory dimension, then auditor's perspective. That is how the session is going to be organized or structured for next 30 minutes. Quickly jumping into demystifying some of the key terms. I'm not going to go through each and every like item here, but we keep hearing multiple aspects, right? Like we keep hearing big data, blockchain, data scientists. Like we have heard about traditional scientists, but like there are data scientists now, digital footprint, open data ecosystem. Like I think maybe let me take few in my view, which are emerging at this point of time, and then talk a little bit about it. So maybe I'll start with data scientists. I think that I really like the word data scientists. Scientists are the ones who kind of invent things, but I don't think data scientists invent anything. Data scientists use data to generate meaningful analysis out of it, which helps kind of make a more logical, data-driven business decisions in the industry. And the next one, which I like, is like digital footprint. Like as the digital customers or digital citizens, we all leave digital footprint more than our actual footprint. Like we go through browsing few internet pages, the amount of digital footprint which we are leaving, which the companies are able to leverage to understand, profile us, what is our likes, what is our dislikes, and what portion of the screens we are looking at, what items we are planning to buy, what are some of the preferential things which we are watching on YouTube or on Instagram. So the amount of digital footprint which we are leaving is exponentially high now with all the mobile computing and also the digital computing. So digital footprint has become a much more broader and even across the worldwide. So the next one is more in terms of open data ecosystem. I think like post-COVID, this has gained a lot of momentum in Europe and UK, where the financial organizations are talking about like open data ecosystem. Like I think all of us are familiar with open source computing or open source softwares, which means that like the source code of those softwares are widely available and people can make use of it to kind of develop their own applications. Similarly, like there are talks in discussions with Europe and in UK to talk about like how the open data ecosystem can be established, wherein the financial institutions don't need to invest the same amount of effort, time, and administrative activities to manage the data. Instead, how that ecosystem can help everyone leverage the same set of data, which will help prevent frauds, which will help prevent a lot of administrative related costs, and at the same time enhance the privacy of the customers. So this is more of a emerging thing at this point of time. The next one is more on the virtual assistants, whether you call it as chatbot or robotics. I think all of us, one way or the other, would have kind of interacted with the virtual assistant. Like it's been given fancy names, like whether it is Siri or like many other fancy names which has been given, where it could be voice enabled, or you get into a website, you have few questions, you kind of a chatbot automatically opens up and preempts saying that can I help you with few things. So I think the virtual assistants have been widely used, and similarly robotics and bots, that's been widely used in the organizations now to do a lot of mundane daily routine activities. So to the extent it can be automated, bots does their job. And similar to like what Mohit said, like it goes through a lot of the general controls related to change management, access management, and there are a lot of testing which we need to do related to this. So robotics has also been used in audits to kind of do more of a continuous monitoring where the associates don't need to do a repetitive tasks. I know few financial institutes who are counting number of associates who are working in the organization and number of bots which are supporting the operation. So like that, like I think there are like we are not too far away from looking at the annual general meeting or the AGM meetings or the prospectus where it says that this company works with 10,000 associates across the globe and 15,000 bots supporting the operations. I think that is where we are heading. The last one more in terms of the regulatory landscape, in terms of the different the regulations, whether it is the PDP bill which is being posted, GDPR, or the CCPA regulations, how these regulations are governed. In my view, GDPR is the most stringent at this point of time, like, and organizations are kind of trying to see how different requirements of different geographies, because again, like in our organizations, we have a global footprint, which means to say that for Europe, we have a GDPR applicability, like whereas like in US, there are different states having their own state requirements. Then like we have UK, India, like again, like multiple regulations to manage the data, whether it comes to customers or the employees, but how we can have a standard framework. So these are some of the basics I wanted to leave with this group, and then kind of maybe quickly jump over to why the data is a new superpower. I think I logically kind of structured this slide into 5 parts. Like we will do a like deep dive into some of these, but everyone agrees that like data is the new superpower, which using which like we will be able to do wonders. And again, like there are like trillions and zillions of TV data which is available out there. So for example, like if you ask like from a Fidelity's perspective, like we use data extensively for analyzing the trends and the customer behavior and accordingly like design our products. So the way it works is it goes through the structure of process where like we do have data generation and collection like using multiple modes, like including IoTs, including cloud, including the mobile applications. We collect data using multiple aspects, and we call it as the data lake where we store them. Using that, like again, our data scientists, they use the data analytics and insights to extract the insights from there, through which we will be able to make a competitive advantage decisions. And it gives a clear trend of how we can leverage that. Like we will do a little more deep dive into this in the next slide, and how we can monetize the data, because like this data will help us grow our business, service our customer better in terms of looking at what our customers are requiring. And at the same time, like it comes with the privacy and regulatory requirements, which we have to adhere to across the globe. So let me kind of quickly move into the next slide, providing more in terms of how big data and data analytics can improve our business. So I think like this way, like we have 4 segments. Maybe like I'll touch upon each one of them for a short time, and then like we can move on to the next one. So from a business decisions perspective, so like we can make a lot of data driven decision making, because whenever like we have our customers like leave their digital footprint, we'll be able to understand what type of products they are looking for, what are they kind of giving feedback. We do something called text mining when we do run our customer satisfaction surveys, or whenever like we have our customers give feedback. The text mining helps us pick up the customer sentiments. So earlier, like it was like each of the feedback has to be reviewed and analyzed by humans. But now there are artificial intelligence built into the machine, which will go and read what is the customer sentiment which we are talking about. Using which, like we'll get a lot of customer insights, and we will be able to develop or enhance our product, which we will be able to serve our business. With that, we will be easily optimize our business operations, grow our business, and expand our products and come up with an innovative product at any point of time. And in terms of the predictive analysis, this is where like I want to talk about like data is not just looking at historic data and doing the analysis to predict the future. Now, like we are talking more in terms of predictive analysis. Let me give few examples in terms of what does a predictive analysis look like. So we have a huge phone center, like which customers are going to call us and talk about like their complaints or concerns or their transactions to be executed. All those call volumes depends on the market fluctuation. A day where S&P is hitting high, we are clearly seeing that the customers' calls are going up significantly and the wait period for those customers are going up. And on the days where the market is not having too much of volatility, like we are not expecting too many calls. So in earlier, like we used to kind of always staff the phone center at the highest possible level because we don't want our customers to have a long wait duration. So with the last 2 years of data, we were able to run a predictive analysis, which says that for the next 1 month, this is how the projection is going to look like. So which means to say that like we are able to like have our staffing done with 5 to 10% like variation, which is a big success for us and which has enhanced the customer satisfaction significantly and reduced the cost. So with this, I think like we are able to grow our business, keep our customers happy, and have an efficient organization where we will be able to optimize the cost. The second example which I wanted to quote is more in terms of the workforce optimization. So this is where our artificial intelligence and machine learning comes into picture, wherein AML picks up the data from any of the data lakes, analyzes the trends, and gives the possibility saying that these are the areas where we will be able to do the automation. And then our robotics team picks it up and does the automation of those processes, and our workforce optimization happens. It definitely comes with its own elements of risks. And we will talk a little more detail in terms of what are the risks related to robotics and bot operations. So finally, like how data can help in managing the risk better. So this is where like fraud detection and prevention is a big thing. Like again, like we are a financial services organization, lot of customer accounts like gets into more of a hacking mode. And our fraud detection and prevention team constantly monitors these logins to look at how we can prevent frauds. So with that, like the data has been moved into a like huge big data lake, which using the AML queries, we are able to analyze if a customer always logs in from a Massachusetts state, and if we are seeing a login of the same account, say from Bermuda or some of the other locations, immediately our like AML picks up and says that this customer is trying to access from a location which has never been accessed, a review if it is legitimate. Before the fraudster is able to get into the accounts and take the money out, the team immediately kind of looks into the pattern of activities, authentication methodology, the IP address through which it is coming, and if it is a suspicious transaction, immediately it gets prevented. So fraud prevention, which I have not mentioned here, but still fraud prevention is always better than fraud detection. And the data is helping us do a real-time monitoring of the transaction and prevent the data. Similarly, I want to do a little more deep dive here because like we are all risk professional, risk and audit professional, and doing a lot more predictive risk modeling. So I want to take an example of credit risk here. How like the current data is able to predict what type of credit risks which we are doing. looking at the market volatility, what is the credit rating of some of the organizations, the models are able to predict what is the risk profiles of some of the entities, using which the portfolio managers and traders are able to make a better judgment calls in terms of what type of analysis needs to be done. Similarly, like on the operational risk management, this is where, like, I would say that, like, this is one of the auditor's favorite topic, where using the historic data, we are able to analyze the trend. If there are 5 million transactions which are happened on a day, and we want to see the anomaly, the traditional sampling methodology, we will not be able to test more than 50 transactions. However, if we use the data lake and the data which is available over there, write a simple SQL script and analyze if all the transactions have gone through the required checks and balances, it may be possible that like 99.99% of the transactions have gone through. It is only 0.01% of the transaction which has not gone through. At a click of a button, we are able to analyze and identify those transactions. Traditionally, the sampling methodology wouldn't have highlighted any of those. Now we are taking that into a next level, where it is becoming more of a continuous monitoring, which means to say that these analytics are set up in a system wherein continuously these scripts will be running on a daily basis or multiple times a day. And if there are any transactions which doesn't go through the required checks and balances, it automatically highlights in the system. So in my view, I want to spend a little more time talking about like how data is going to help auditors in the subsequent slide. But in my view, it's a huge boon for auditors in doing multiple types of reviews and testing and adding value to business. With that, let me quickly touch upon regulatory dimension of data. It's a huge ball game at this point of time. So I want to talk a little more in terms of how the regulatory landscapes are looking. As I touched upon it in the introductory section, like there are various regulatory requirements, like whether you call it as GDPR, CCPA, HIPAA, or SOX. How organizations are grappling with so many regulations which are applicable for this data, and especially for an organization which has a digital footprint across the globe, whether it's related to customers or whether it is related to employees, they need to manage the regulations according to this one. So within our organization, how we are planning to manage these regulations are, we are planning to have a baseline requirement of all the regulatory requirements and look at like which regulation has the highest level of regulatory requirements. So across the globe, if we keep that as our standard policy or a procedure, by default, like we will be in compliance with most of the regulations which are applicable, except for a few nuances which are applicable to other organizations. So with that, like I think we are able to run a most efficient compliance process which complies with all the regulatory requirements. Moving on to like privacy and data protection, I think this has been a big topic of discussion from an India perspective since we are talking PDP bill from last about 3 to 4 years, and we have the new draft bill out there. But like I think drawing some parallels to GDPR, I think it's more or less similar to what like GDPR has. But at the same time, so these are some of the regulations which are yet to come into force because it is still draft. It has to go through the regulatory process and become a bill, and then like we'll have some implementation timelines and then comply with those in India. But however, like the organizations which are serving in other locations, the other regulations such as GDPR and CCPA like will be applicable. So let's touch upon like few minutes on the open data ecosystem. I think like this, as I said, like this is a emerging topic across the globe, and like how like we will have open source softwares which will help software developers develop the software using open source applications. Similarly, like European organizations and UK at this point of time talking more in terms of having a open data ecosystem using which the government, the customers, the regulators, everyone will be able to use the data in a more consistent way, which will help organization to run the most efficient operations. At the same time, help and prevent the frauds across the organization. So I would recommend everyone to keep a watch on this topic because this is an emerging topic at this point of time. So moving on to auditor's perspective, as I said, this session has been, or this topic has been divided into two aspects. One, as an auditor, how am I going to audit the data? And the data has various aspects of it. Like I have listed few critical key risks here. The second aspect which I want to talk is how data can enable us do a much more targeted, efficient, and higher coverage audits for the business. So looking at the first one, like more in terms of how are we going and do the audits. Let me spend few minutes on each one of these as these are critical aspects. And data security, I think like Mohit touched upon it already, like few of these controls in terms of access controls, right? Access controls becomes the key aspect of how we are going to keep the data secure. In a traditional organization, like you have all the data on the prem, which helps you manage the data security controls, especially access controls, in a much more better way because you are in a better position to define what type of profiles has to be there and you can configure them. With the cloud environment kicking in, so the data is going to be hosted on the public cloud. We need to come up with a much more stringent access controls, which helps us build controls in such a way that people have only right level of access based on the need to know basis. So the second one is encryption. So again, like traditional, the data was on-prem, nobody got access to the data centers, physically segregated, much more secured. Our data doesn't need to go through a lot of encryption process because we ensure physical segregation, logical like access controls, which helped us manage the data. Now with cloud environment coming in, like encryption becomes a critical control. One should review whenever we are doing an audit of any of the data environments, whether you call it as a database or a data lake or a data hub, we are calling it in various names. Pardon me. So, and also like whether it is a DB2 database or Oracle or SQL, irrespective of the technology, irrespective of the environment, we need to ensure that data is encrypted and the encryption keys are managed appropriately. I think most of the times auditors go and check how the encryption is done. But the area which we need to focus on is how the encryption keys are managed. In a lot of Azure and AWS environments, they have a service called Manage Your Own Keys, which means to say that like AWS says, we don't want to deal with your encryption keys. You take away your encryption keys and you manage your own. But drawing a parallel to some of the vendor-based product, I would call it as a platform as a service or software as a service environments. Like we will not be in a position to dictate terms saying that like we will have our own encryption keys. So then like more of a escrow keys comes into picture. Like when I say escrow keys, it is jointly managed by the vendor and also the organizations. So I think I would highly recommend anyone who is doing more of an audit of data to look at encryption key management, because that is where the crux of the control is. Because encryption is a standard basic control when we are talking about any data environment. But how the keys to the encryption is managed is going to be very, very important. So the next one is more in terms of backup and recovery. I think with the current environment, resiliency is one of the key aspects everyone needs to look into, like how the backup is managed and how resilient are the cloud environments to ensure that the data, like if we want to recover it at a right recovery time objective, we are able to do that. So I would urge any of the auditors to do a little more deep dive in terms of, do we have a like a right redundant systems in place? If primary goes down, how the backup comes into picture, and what is it a real time like data updated to the two environments? So those are critical aspects have to be taken care of. Quickly switching gears, third party and suppliers. I think we are like we are in an environment where most of our data is in the vendor environment, whether it is a cloud where our applications are running on the cloud environment, our data is sitting on the cloud environment, or we are running on a vendor application, which is either a software as a service or a platform as a service, or we are sharing data with the third party vendors for doing further processing. So in my view, this is one of the highest risk area and has to be handled and dealt very clearly. So like based on my experience of auditing some of the vendors related to data, the contractual agreements with these vendors becomes a very, very key aspect in terms of how we dictate terms as to what controls have to be there on these environments, so that like we know that our data is protected, whether related to any of these, right? Like data breaches or data loss prevention controls, compliance violations, unauthorized user access. We have to be very, very clear with the vendor in terms of if there are data breaches, how they are going to manage, how they're going to manage the incidents, how they're going to communicate to our organization, how we are going to communicate to regulators. So there is a new regulatory requirement which is called CERTIN, like which is an India requirement, wherein it says that like within 6 hours of any data breach within our organization or vendor organization, we are obligated to go and report this to the government within 6 hours. How those SLAs will be met. So these are the aspects which I would urge people to kind of get into a detail and look at the contract. Once we analyze, I'm sure like these contracts are hundreds of pages, but like we need to kind of zoom into the right set of requirement, which is related to security requirements or the control environments areas, and understand what type of arrangements we have with these suppliers, which will help us understand what is the baseline expectation of the supplier in relation to cybersecurity or data security or control environment. So I would encourage people to kind of get into a lot more deep dive into these areas when it comes to third party suppliers. Data privacy, I think we have already spoken about it. So please do look into areas such as how the data collection is done, like where and all it is stored, how it is used. Do we have the required consent from the people like who are sharing their personal data? How it is retained, how it is deleted. I think like once the right to be forgotten clause gets kicked in, we need to have an inventory of different system in which we are keeping the data. Excuse me. How the data is going to be anonymized and how our policies and procedures related to privacy are detailed enough to manage all these aspects. So this is more of a regulatory aspect of the data. So the next one is more again related to technology, which is data transmission. So there are a lot of risks related to transmission controls, whether it is the data integrity, like who are the people like who are accessing it in transit, what type of checks and balances are there in terms of ensuring that the complete set of data has traveled from one set of source to another set of source. So in my view, these are some of the key risks, not all the risks. Any auditors who is doing a deep dive into any of the data environment has to prioritize the risks, classify the risks into high, medium, low, and focus more on the high risk areas, so that is the right return on investment on the internal audit department. So I want to share a couple of examples based on my prior experience of dealing with the cloud environment or dealing with the vendors. So in one of the audits which we recently completed, like we looked at the cloud security controls for that vendor. And when we started doing a deep dive into the areas, we started realizing that we don't have the right set of contractual clauses with the vendor to protect our data. And as Mohit was telling, once we move into the cloud environment, it is very hard to come back onto the on-prem. And we figured out that there were clauses of penalties, which is exponentially high if we are pulling back the contract onto from cloud to on-prem. So those are some of the nuances related to data and cloud. I would urge everyone to kind of look into those type of details in terms of what does it mean to come back? Do we have the required clauses to come back safely? And how, once we come back safely back into the organization, how they are going to ensure that the data is deleted in the most secure manner, whether it is switching from one vendor to another vendor or switching back from cloud to on-prem. Those pullback clauses has to be reviewed thoroughly, in my view. So I would leave my thoughts with like more in terms of how are we going to use the data while doing the audit of data environments, and switch a little over to how data can help us do the audits in a much more efficient and meaningful manner. So again, this one, I want to segregate this into two. One is data analytics and the second one is automation. I think like traditionally, like we have been all taught in terms of how we can use the data to kind of identify trends, relationship, anomalies, finding a needle in a haystack. Those are the advantages. I think like we could be using as simple as a spreadsheet to do it, SQL or ACL or maybe like Alteryx. There are various tools which are available using which we are able to do the analysis. I think I would encourage everyone to think through how we can do a population testing versus a sample-based testing. In our organization, we are very clear. Anyone who wants to do a testing of any of the audits, if they are doing a sample-based testing, they have to specifically take an approval of the project manager who is leading that audit to say that like why we are doing a sample-based audit testing and not a population testing. Because we are in a digital world, we have all the data available to run the tests for the entire population and in a much more automated way, which will help us identify the open risks or the control weaknesses or come up with the trends and help a business grow their business in a much more meaningful way. So I think it's been a tradition within our organization to do a population testing and not do sample testing for any of the environments. Let me touch like little more in terms of the people aspects of data analytics. So like again, there are three sets of auditors whom typically I've seen in the industry. One is like financial business auditors. Second one is more in terms of technology auditors. The third set of group of people are more data analytics people. So I think now the lines are getting blurred big time. Are they like business auditors or the financial auditors are acquiring skills of doing data analytics so that they are equipped to understand the business, understand the process, understand the risks, translate that into tests, use the available data to run the test, and share the results with business and explain them the impact in a much more better manner. Maybe like if we go back 5 years, business auditors used to talk to data analytics guys and say that, oh, like this is the data you have, please run the analytics and share it back with us. Data analytics people, no clue as to what is the risk, run the test and give it back. I think we are not in the environment where business auditors are going and asking for help from or like asking for a favor from data analytics team to run the test. They have acquired those SQL skills like ACL or Alteryx skills to run the analytics on their own and come up with a meaningful analysis and share. To take this one step forward, the lines between the business auditors and technology auditors are also getting blurred. That's where it's a huge upskilling opportunity for all the auditors to start thinking more as a tech enabled auditors, whether like it is ITGC or a high-end technology audits. It's a right time for everyone to spend time and upskill themselves on more on the technology side. So I think that is more in terms of upskilling themselves and people related aspects for doing the data analytics. So now we are getting into a zone where it is we have done the analytics. Let me give an example. Say for example, like we are talking about like a payroll audit, right? Like we want to ensure that if we are paying all our employees, like if we have like a 30,000 employees in the organization and the 30,000 employees payroll is done, we need to ensure that like we are not paying for anyone who is not working in the organization. We call them as ghost employees. I think that is one of the simplest thing which we always do in a payroll audit. So like every time we do the audit, like we do that test. Like the team member came with an idea, sir, like why can't we have an automated script running like every month to see that like what is the payroll run happened, how many organizations, how many people are there in the organization, are we paying for someone like who are not there in the organization. So that has become an automation. That is a very simplest automation one could think of, versus we deliver prospectus to like 25 million Americans in United States, and it's a regulatory requirement. And these prospectus are delivered on an annual basis. Traditionally, we used to do a branch audits where we used to go and review if the prospectus have been delivered or not. But now, like we don't do that anymore, because our automation will ensure that like if there are 25 million customers on the system, whether the prospectus have been delivered, what is the status, if it is not delivered, how it has been handled. And it's been beautifully shown on the Tableau dashboard, where we are able to double click on the items where it is not met the regulatory requirement. I think like we have a wide spectrum of opportunities for doing the automation. So few I think like words of wisdom here. Automation like also has two aspects. One is how automation can help the internal audit function to do the testing much more efficiently, which means to say that like we call it as a continuous monitoring. We monitor that control on a continuous basis, whether it is multiple times a day, daily, weekly, monthly, yearly, depending on the frequency. The script runs, throws the results, comes to us, we analyze and dispose it out. And if you see a huge non-compliances, we issue the audit report based on the analytics done by the bot. At the same time, there are various tests which we run, which we feel that like if we hand this over to second line of defense, which is risk and compliance, or first line of defense, which is business, and it is going to help them do the reconciliations on a daily basis. So like another example which I want to quote is like if there is a request from one of our customers to process the mutual fund before 4 p.m., we need to see all the transactions which have been placed before 4 p.m. is processed or not. So instead of we doing the reconciliation on a daily basis, we developed a bot which does the reconciliation at 4:05 and shows the results. So that bot, we gave it to business. Business is able to use that bot to do their own reviews and acts as a good control mechanism. I think it's a very important decision as to what are all the automation bots which we need to keep it with ourselves. What is that like we need to give it to second line of defense? What should be there with the first line of defense, which will help us drive the clear accountability in terms of who should own what type of controls. So in my view, let me kind of close it out with a quick summary. Data is the new in thing. Definitely, I think like we have seen significant business enhancements using data. And as auditors, if we are not able to leverage the data, if we are not able to adapt to the change and become a change champions to kind of learn new techniques for leveraging data to drive business, leveraging data to drive automation. I think, in my view, we are failing as an advisory function. We are failing as an oversight function to enable our business run in a much more efficient way. So I would recommend everyone to acquire those skills and use data extensively. And I would reiterate how I started. Let's everyone move away from traditional financial business auditors to more hybrid and technology auditors, leveraging data and analytics and big data to drive a much more meaningful business growth for our own organizations.
Thank you, Ram sir. And sorry, is my voice echoing?
Yes, Bindu ma'am.
Okay. Now it is fine.
Yes, ma'am.
Yes. Yes. So thank you for showing the auditor's perspective. And I have a few questions for you. How should young CA prepare themselves in today's time to remain relevant in the field of data analytics and risk management? What roles of auditors in the field of data you think cannot be replaced by technology? So there are two questions.
Ma'am, I think maybe I'll take the first one. Like, I think the advice for the young budding auditors is have a data mindset. I think like it's a big word. Like, many people say, like, sir, what do you mean by data mindset? So I would urge them to think through the data which is business is generating. In my organization, I'm seeing that like in each and every transaction, we are leaving a lot of digital data footprint in databases. If we harness that data, pivot it, and look at the data, like what the story is telling, we will see a beautiful trend which coming in. For doing that and harnessing that data, we need to have a data mindset which will help us understand the data environment better. So any auditor who is new in the profession or who is already existing in the current profession should understand the business process and the technology component of it, like how each of the transactions we are leaving a digital footprint within the databases and how I can use that data to run much more efficient audits. That is one. Number two, again, upskilling in my view is a very, very critical component, which is how we can learn data extraction tools. We call it as ETL, extract, transform, and load. And that is the first step of doing the analytics. So learn some of those skill sets, like whether it is Alteryx or SQL. There are like lot of training platforms which are available open on the lot of open source systems, which we can learn. And once we have that learning habit, automatically like we'll apply that and we will automatically see the changes in the system. So I would encourage everyone to have that data mindset, think big, come out of the box thinking, always challenge yourself, saying that why should we do 50 samples? As I said, in our organization, if somebody has to do a sample-based testing, they have to take an email approval of the project manager who is running that project to say that why are we doing sample and why not population? Whether it is 5 million or 50 million transaction, we have a computing power to say that those 50 million transactions have gone through the required control environment or not. So those are some of the key tidbits I can share, Bindu.
Sir, can you kindly elaborate on ACL and Alteryx?
ACL and Alteryx are two different tools which are available outside in the market. Those tools will help us manage the analytics in a much more broader way. So I would call spreadsheets or Excel as a fundamentals of data analytics. If we need to review 1 lakh transaction, if we need to review 2 lakh transaction, Excel is able to do that. Like whether we want to do a reconciliation, we want to do a pivoting, we want to do analyze trends, we want to do a comparison, Excel can do that magic. But if we are talking in millions of transactions, because like if I'm an auditor of a ICICI bank, Excel won't help me. Like I have to have the right set of tools such as Alteryx or SQL or ACL. These tools will help me manage the big data. Like if we are really talking the big data. So these tools are available in the market. We are able to deploy on the system. There are training courses which are available, like which the auditors can go and take, and then use these tools to kind of analyze, do the trending, come up with a much more meaningful results and share it with the business.
Thank you, sir. And with this, we come to an end of a very interesting, knowledgeable session. And do we have, sir, for closing? Ye Gyanchand Sharma ji, Mishra ji. Okay.
मैम एक्चुअली कॉल नहीं लग रहा है सर का. आई थिंक ही इज बिजी.
Okay, no issues.
So you can conclude this webinar.
Yeah. So let us all put our hands together for all the speakers who have given their precious time and wonderful insight for this session today. And I would like to extend my thanks to CA Ankur Garg, Mr. Mohit Kapoor, and CA Ram Prakash Sharma ji. And it was a wonderful evening, and such kind of learnings are really required for our growth, and professionally also, personally also. So thank you, sir. Thanks a lot. And I would like to conclude the session by quoting a line that is, think big, trust yourself, and make it happen. And this is not only for the speakers, but also for the audience and everyone. Thank you, sir.